Hello, I'm Robert and welcome to my channel where I talk about everything automated algorithmic trading or simply algo trading. What a week last week was. Talk about a whirlwind of volatility. We're going to go over last week and where I talked about one of my experimental demo accounts. Today I'm going to show the impact of that volatility in my real money account. But first, let's get to the chart and actually talk about what a crazy week it was. So here we have last week starting at Monday, where the bulls took charge of the market, picking up where they left off from the week previous. And then the bears, well, they woke up. Nothing overly dramatic, nothing out of the ordinary, and certainly nothing to indicate that they were about to unleash a torrent of onslaught against the bulls. Last week we traced 23 weeks of price action, and we're going to take a look at the chart in a longer picture a little later on. So looking at what we see here though, Wednesday, the level of volatility that occurred Wednesday is just insane. My own real money account, where I would normally see 16 to 20 cent profit levels, I was seeing 70 to 80% profit levels per trade. Now, I don't have very much invested in it, and I have a very high level of defensiveness. But still, for it to show such a dramatic increase at such a level is still a situation to pay attention to. The irony of my own real money account is I'm using 15 pip spreads, whereas the account I demonstrated on Wednesday is only using 2 pip spreads between each level. So it clearly shows that if you can afford to put more money into the market and get tighter layers between your levels, you can benefit more aggressively with such volatility. The more defensive you are in your trading, the less likely you're going to feel the impact of that volatility. So after Wednesday, Thursday didn't seem to be that impressive. It was still quite aggressive comparatively speaking, but after Wednesday's onslaught, Thursday just seemed like the bears were losing steam, getting tired, getting exhausted. And then Friday, the ultimate hammer down against the bulls, where they drove price back down to the 1.062 range. This is impressive. 23 weeks of price action gone, wiped off the charts. So this is a major offensive by the bears last week. And if we scroll this out a little bit and we start taking a look at each of the various weeks in question, we can see just how aggressive this actually is. We haven't seen prices in this range since the end of last year. It's roughly around late November, early December of 2023. That much price action has been retraced. I said last week in my outlook then that I thought the bears were going to test the levels. I had no idea they were actually going to destroy them and push prices back down so low. So that was a bit of a surprise. But it only highlights the one thing I've said from the beginning, and I reiterate on a constant basis. Don't try to predict the markets. There's no way of knowing when these extreme volatility gaps are going to hit. And when they do, if you're on the right side of it, they are wonderful. If you are on the wrong side of it and your strategy can't handle it, it will wreck you. It will take a huge toll on your portfolio. So don't try to guess where the market is going. Simply follow it where it goes and plan for the worst case scenario, which is what my own strategy is. And I made out very generously last week, even in my real money trading, which we're going to get to those charts very quickly. So let's get into what I think is going to happen next week. To be honest, I don't know. Given the amount of pressure in the order book right now, I think that there might be a bit of a stalling out. We might see a little bit more downward pressure since the order book buy side is way down to the 1.054 level. The buyers are definitely taking advantage of this lower price. The range itself has been pushed lower, but I don't suspect there's enough pressure to really push the range too much lower, if at all. I think at this point, price is just going to bounce back upwards to some degree. It's not to say that the bears aren't done punishing the bulls and could try to push price lower. But at this point, I don't think the order book shows enough pressure to really push that to the limits. I think Monday is going to probably be more of a bit of an upswing. Not necessarily a lot, and certainly not like what we've seen back here where the bulls just hammered the bears aggressively. But I think we will see some pushback from the bulls, and I think prices are going to climb again. Really what we are looking at is a balancing within the market between overbought and oversold. And I think that's really what this whole range represents, is the market is trying to find a nice little equilibrium. And so far, when you look at the overall long-term market, it seems to have done that pretty well. Trading in the range area is going to continue to be very profitable if you have the right strategy. If you take a look at a worst case scenario and plan out every single trade, you are going to do well. You are going to be profitable and you are going to make money. Take a large amount of care and plan very carefully, though, where you want to be within this range. If you're only putting a limited number of positions down, you might want to think about a wider spread between those positions. If you have the capital, think about a tighter spread between the positions and smaller position sizes to take advantage of some aggregation along the way. So now let's get into the actual real money account and see where it's at. Okay, here are my actual trades. Since I started this particular account, and you can see the impact of last week. Just completely devastating anything I'd done to date. You see some points of volatility along the way, but last week really just took the account to a whole different level. And that's really the whole thing that we are discussing as we look at this market. You can clearly see through this kind of a trading chart duration, volatility, and intent of the market. You can clearly see how it fluctuates and how the back and forth motion works with the process of accumulation and aggregation. Whereas to date of this account, this has been my highest accumulating point for the number of positions I've had open, and we can see just how long these positions have been in play. And we can see here we had a bit of a shorter run, not as many positions open. Here things started getting a little bit spicy, basically last week. The range is tightening up, The positions are getting closer and closer together because of the market fluctuations, and then all of a sudden we get the insanity of all of that volatility just kicking in and really just hammering home what the market has been doing. Let's see if we can get this zoomed in a little bit. No, not quite. There we go. Now let's zoom this in a little more and see if we can't get right to this volatility spot. Okay, it's being stubborn. So we'll do it this way. There we go. Now we can see between the various dates. You can even see how things are moving so quickly that some of the orders aren't being processed as fast as they should be by the exchange itself. For example, here you see the extreme overlap where it's bought in and then the market drops so quickly it looks like it's almost a vertical line. That is insane at how quickly the market is moving. You could also see that process right here, where the market just drops such steep rates. Let's see if we can get a little closer. Okay, here we go. And you can see where I've sold off everything, and now I'm just doing one position trades, which was the end of the Friday session. But you really see very clearly how volatility takes its shape when you visualize your trades in such a graphical manner. That volatility works great here, but had this gone against me, you would see price action going upwards and you would see me accumulating a lot more entries. So moving forward and looking at the amount of daily trading. This is the whole history of my buys, sells, and stop losses. But let's focus in on last week. Here is my last week's trading activity. Monday, I did nothing but purchases. The market went against my position. Tuesday, I balanced out with purchases and sells equaling out. Wednesday, I did some purchases, but I did a huge amount of selling off of my positions. Again, we see the impact of volatility between the numbers of buys and sells. Thursday, I was balanced out a little more with a little more buys versus sells. And Friday, I had fewer buys than I did sells. Again, having just a little bit more volatility that went in my favor. I wouldn't necessarily say Friday was an overly volatile day because it really looks like it was pretty much within a standard deviation of what you would expect a normal day to be. But Wednesday, on the other hand, you can clearly see the impact between the number of purchases and the number of sales. This was a highly volatile day. And this is how you can actually see volatility at the trading level within the number of trades you take per day. For example, let's look at the whole chart now, since the history of this account. And it becomes clear as you look at the history overall. The ratio between buys and sells, on an average, you can see when the volatility points really take place versus the quiet market. When the market is quiet, you're not going to make as much money. It's going to be slow and dull. But when the market gets rowdy, like what we see in a very clear cases along the way, areas that really stand out, like last week, you can clearly see just how much volatility plays a major component of your trading. Volatility really is a sign of liquidity. Money moving into the market, money moving out of the market. And when money is moving, profits are flowing. Subsequently, if you're on the wrong side of volatility, more often than not, losses are also flowing. So you want to be aware of what that means. Now let's actually look at the equity curve itself for the account. How much real money has this account made since I started it? So you can see my starting point. And even in the equity curve, you can see where volatility gave the account a boost. You can see it through what looks like sharp uptrends or sharp peaks. And that really is how you can see volatility even on the equity curve if you're on the right side of it. Now, if you're on the wrong side of it and you take stop losses, then of course it's going to drop down aggressively and you're going to see those hits in your performance of your equity. And here we can see the impact of Wednesday alone and then how it continued being higher than normal throughout the rest of the week. So this is how you can actually check and see within your own trading just what kind of a market you are trading in. Finally, I'm going to look at the exposure. How much money do I have at risk? Real risk. And that's the important part. If I was to close the account out right now, completely sell everything off, what would I walk away with? That's the whole point of an exposure chart. And it's more valuable than a drawdown chart because this gives me a clear idea of how much extra money I have. Being a zero balance account, meaning anything below zero is cutting into my original deposit. Anything above zero is actual profit I would walk away with, taking into account whatever I would lose if I sold everything off. And right now I've made roughly $70 of actual money that I would walk away with. So if I was to close this account out, $70 in my pocket and I'm good to go. This is not bad when you consider how little I'm actually investing at any given moment. Now the important part of exposure and what makes it such a good tool to help track your performance is you always see it cycling above and below zero. Exposure is one of those wonderful little tools that when it's below zero, you see what your risks are. In other words, if I was to have closed my account right here, I would have lost about $35. That's an important factor to think about in your trading, because it clearly shows you that by the time you sell everything out, pay your fees, you have this amount of your actual budget left. Whereas if I would have sold here, I would have made a net gain of $40. This is a more elaborate and appropriate way of measuring just where you're at in the trading system. So you are either one, making purchases and exposing yourself to more risk, or two, you're in a situation of direct profit where you have no exposure of your original capital. And that's what this really means. My original capital is not being exposed. This is my profit. So as you look towards your trading next week, think about all of these factors and how they play within your own trading. And a lot of what you look at through your exposure, through the differences between your buys and your sells, as you look at your liquidity and equity charts. Figure out how you can tune your strategy to take advantage of some of the unpredictability in the market. The unpredictability that, when captured in the right way, can really be a generous profit to your account. So let's look at the overall, the bigger picture. Let's scale this out. So now we are looking at a significant amount of time. And as the markets continue to move back and forth over next week, the next coming weeks, the next month, I personally think we could see more of this repeating pattern, back and forth between the highs and the lows. Unless we have some kind of a major event like what we had with the pandemic, I really don't think we're going to see a big market difference in the long term. And we could even scale that out and see, in terms of what we're looking at, the economic issues we dealt with, and even still, it's not that bad comparatively speaking. When you look at the ranges, and you really see how those ranges play and fit together, we're doing pretty good. The market is really in a good state to bring in good, healthy profits, providing you are aware of your risks, providing you understand what those risks are in relation to how much money you have on the table. So let me know what you think about this. How was your week? How did it impact your trading? Were you on the right side of volatility, or were you on the wrong side of volatility? Share your thoughts. And if you like this video, please give it a thumbs up. Help me grow my channel. If you're not subscribed, please subscribe. Thank you for watching.